Okay, and we're back. My Ninja Trader rocking and rolling. Be ready to trade. Thank God I wasn't in a trade. That would have been scary. Especially if my stop loss was like $500. I bet. Oh my God. What? Are we live again? This is freaking weird. It loaded all my charts back up. Huh. Boy, it broke out of that thing fast. Good God Almighty. So we're uh,
Order
sell.
filled.
Keep the stop loss tight. Take profit down to him. We're gonna go ahead and grab this profit if we can. Thank you so much.
Stop filled.
Oh, let's go. And it's supposed to go all the way down to either the 0% or like halfway here. And there's your halfway. Bam. I could have held a little bit longer, but why? Is this live now? What the heck? It's not even live anymore. Hmm. Oh, this is weird. Why, why is it not showing my live? Did it not let me go live? Now look, now you're showing up over here. Now that's weird. I can't find my own live. Hi, baby. There it is. Okay, cool. So we're back into business. Let's see what that last trade brought me. Ho, ho. Here we go. $403 profit. Finally, for the day. Because I'm telling you, it's been hell. Like, it's been so rough. I I put in like 20 contracts and hit the stop loss both times and did not notice that I was trading 20 full contracts. Oh, but I'm on it now. Like we're 400 to the good. That's $2,400 profit in one day. Just to let you know. Life changing money. I just need to get it together. Mm. All right. So okay. So this is in queue. I don't want to. Where is this thing going? Why is it going that far now? Let's go to 30 minutes. Is it hitting this? Is it really doing? It is. Oh God Almighty! Let me edit the stop loss to 150. This to 500. And let's get in this
Order filled.
booger. Oh yeah, we're going down. We're going way down. Oh my God. This might get me past today. What in the world? Oh no, you got to keep on coming down, bro. What are you doing? Don't you even try to retrace on me. That's right. That's right. Get your head right. Get your head right. Get down here. Get down here. Whoa. Come on. Come on down. Don't be scared. You done come all the way down this far. You gotta finish. You gotta I mean, it's in the textbook. You gotta finish this move. That's all there is to it. Woo! $1,000. Let's go. Hallelujah. Oh my God! It just went right back. Oh, what are you doing? Oh God, I can't even stop it. Oh jeez. Come on, man. You were so close to hitting down here, and you just quit like that. So wrong. Baby, are you seeing this? This is This $2,000 trade. Oh, I can't breathe. Oh my God, I'm
Order
taking the
filled.
1,200. I can't. I'm not greedy. I'm not greedy. We are up. I have recovered 2,000, and we're 1,600 to the good. God is good. I'm telling you what. If I ain't never seen nothing like that before in my life. Oh my Lord. Mm-hmm. Hold on. Let me see where the bottom of this thing is, and I'll go to this red stick right here. Oh my God. We've got to write that down just a little bit more. Oh my God. My head is blown right now.
Order filled.
All right. We've got like plenty of room to even let that thing just go. And that's still another. Oh my God. Look. Well, would you look at that? Holy jeez. I have never. Like this, these are these good moves too. Like right before news comes out, it gets
Stop filled.
so volatile. I have made $4,133 today. God. And we're still not done yet. We can get a little bit more in there.
Order
We're gonna
filled.
get a little bit more, y'all. We're gonna get a little bit more. We're gonna get a little bit more. I believe so. We're gonna hit this little blue line like a pregnancy test. We're gonna hit it right here. We're gonna have a baby, baby. Come on. Come on. There you go. There you go. Come on. Come on. Don't be shy. Come here. Come here. Come here. Come here. Come here. Woo, doggy. I gotta get out. I gotta get out. That's $2,500, babe. And it's still gonna hit my blue line. I'm gonna be pissed. Oh, look at that. Oh, it went right through it with no hesitation. All right, so I told you, babe. I know what I'm doing. Look, that big humongous. As soon as it dropped below the zero, I'm like, oh, I gotta get in because it's going way down here, and it might even try to go down to this one, and I'm not even gonna bet that because that's just too dangerous. I'm up for the day. I'm $2,500. Mm-mm-mm. Yeah, I'm still sick, babe. Oh, oh my God, I'm tripping. I gotta share that to the strategy team because they are going to die when they see this money. Oh my God, stop it for today. I'm gonna get freaking funded today. I'm pissed off and sick of not being able to withdraw money from this shit. Excuse my language, but it's getting on my nerves. And I'm out of coffee. I might as well go ahead and quit. Oh, on the live stream. On the live stream, boys. My God. I can't. I'm stuck. Wait a minute. Did that blue line move? Huh? Oh, yeah, I moved it. I forgot about that. Yeah. Make a cup of coffee for your head. Don't stay awake for too long. Oh, and why is it going up? All that momentum to bring it down. Eh, oh God, did I pass the evaluation? Like Jesus Christ, that is one day. That should be a pass. I'm sorry, but that's freaking stupid if I didn't. 52.5. No, I didn't. I had $1,000 of commissions, I think, or something like that. Let me look. It was something ridiculous because I've done a lot of trades. That is insane. And my win rate has never been that low, ever. My win rate was 46.89% for today. And that's awful. But I'm up $1,483.68. And that's right here on this report. Like it shows everything, but this is the total net bring home aftermath of all the commissions and stuff out of 209 trades. And that was me fighting 40 contracts that I sold for no apparent reason. It was this little bitty thing right here that had like it had it like I was typing, but watch, it's going up. So I'm on like if I was to click buy right now, it would have 30 contracts, and that's where I messed up. You're not even supposed to just trade just the one, two, maybe three at max, and I was trading 20. So, um, my advice: whenever you're doing your stop loss, put in how much you want to put it at, and usually with the ATR, that is the best way to calculate your stop loss. Um, and that's with the indicator ATR. Boom. And so at 36 pips, so it's 36. You want your stop loss to be at least uh, 672, 73. And then at the 73, your take profit should be 150. And that would give you a 2-to-1 risk ratio. And that's how you calculate that. Fairly simple. You just double the numbers and then let that be your stop loss, and then double those numbers and let that be your take profit from the average true range. Capiche? Which the average true range is definitely coming down. I've never. And what's crazy is there wasn't even a quad divergence to bring this on. Like it just tanked out of nowhere. And there's news to come in another 30 or 15 minutes. So that's going to even be a little bit more interesting to see. Wow, this might just really just take a reversal candle right back up and make another $2,373 for the day. Like that's insane. That is insane. Oh, I'm so glad this was on live because this is recorded. So I'm really glad that this is like visible for everybody to see that you can make money day trading, and it's ridiculous. Like this one stick brought me 2,400 freaking dollars. Ooh. Mm-mm-mm. Merry Christmas. That's something else coming up. Uh, but we got news in 15 minutes. I'm very excited about this. When it went down to here, I'm like, oh crap. And then when it got below the zero, I got in. So that was a how many points? Jeez, okay, so it's 210, and it got down to 2120 that I got out. Or no, I got out here at 50. So it went 60 points, and that is huge for one trade, just a one single minute And that's a 30-minute chart too, y'all. Like I was very zoomed out for this, and I don't ever trade on a 30-minute chart ever. Oh, oh my God, that was nuts. That was the best trade I think I've had in months, if not a couple of years. And to be as clean cut and precise as that, and just and it falls right out of the sky for you, that was beautiful. And so it's liking this zone right here of respectable price zone. So let's just see what happens because this we're below the 20. This we're almost below the 20, and that means another downtrend. That's insane. This is below the 20, and this is below the 20. So we just need this to go below the 20, and we are Gucci, and it'll go right back up. That's insane. That is insane. Oh, wow. What a day. Nasdaq, that's just that's the logistics of Nasdaq in a nutshell. Ooh, it's mooning. Huh. And then if I have to say, as far as a Fibonacci on this retracement to go back up, that's going to be nuts to draw. Okay. Wow. That is just crazy. Just say from this blue line to, I think I did that backwards, didn't I? I did. Good God. Okay, so whenever it bounces off of this blue line, allegedly, like it's gonna go probably a little bit below it, but not by far. That's gonna be your true bottom range for the Fibonacci retracement, and then it's gonna go a retracement is gonna go back up to the 38, and then it's gonna retest again. But if it stays within the 38, when it retests, that shows a true sign of the rest of the way up. And it can go all the way up to here or here. Uh, take the risk to reward. That's going to be 38. And then we can put that down here. And the risk to reward. I'm going to take it to this green line right there. So it's giving it a whole bunch actually over. That's nice. And that's 6 points. Why is that? All right. Yeah, it's rejecting this zone right here. And then this is below the 20. This is almost there. 24.11. God. As soon as all these get below 20, we're going back in. Even if it's to even just cash out right here. Just that next level. I mean, it could go all the way back up. I really don't know. I feel a retracement coming to go back up, but we do have market news in 9 minutes. So that's a pretty big deal. And I hate how this quad divergence, like the way it works is it has to all be under 20. And then I utilize the RSI along with Bollinger Bands to keep it all in congruence with each other. If they all agree, then I agree. And then we go up. But sometimes it starts going up before the thing even hits down below the 20, and you have to wait for another retracement for it to come back down into the zone before you get the true all 20. And then sometimes this will be at like 40, this will be at 60, and then it just skyrockets, and this will be still below 20. And I'm like, what is this thing doing? But then there's other times that I've hit with all 20 on the board, and it just freaking goes. And there's never really a safe take profit with this unless you're using the Fibonacci. And that's a self-drawn thing. I go from wick to wick, from the top wick to from the highest of the high recent to the bottom low of the recent low. And I mean, if I wanted to be technical with it, I should be right there on that wick, because that was the last green candle at the top. But technical analysis is taught as a zone and not particular price points, individual, down to the penny, down to the wire kind of thing. Like if you were to have a zone when you're drawing your lines, I would say that we could agree that this trend line, there's a lot of room there, and that doesn't make sense, does it? No, it doesn't. So how do you fix that? Well, you first shorten it a lot. Well, if it wants to shorten, and then you kind of, well, you're going to have to draw another one really. You just focus on a tighter area. And so that way you've kind of got the middle here as to a resistance or support on an uptrend. And then whenever it goes below this, whoop, there's a downtrend. And it goes below the 200 EMA. All right, so we've got 5 minutes for news. And let's go back and check this out. And then 5 minutes for news. This might just go right back up here just to finish it out. And I would laugh so hard. We're at 22.16 here. We're below 20 here, below 20 here, below 20 here. 22.16, and we're below 20 here. God, I hate this. Like, if this would just come on and get with the program. Just this one, that's all we're waiting on. This one right here. We gotta get it in the 20. And it's already taken off without us, but that's okay. Nothing like watching paint dry. But now, for the people that just joined in, I had a very big mistake earlier today, where my mouse wheel made the order quantity go up to 10, 20 contracts at a time, and I would hit my stop loss as soon as I hit the buy or the sell button, whatever which one I was in at that moment. And it took me down to like almost blowing my account. I had like $100 worth of room left. Um, negative 2,000 something dollars. This is a brand new account. And as soon as this happened, and I've been fighting all day long, like I have a screenshot of like $85 or something that I was in profit. And I was just tickled to death that I had gotten into that profit and recovered the $2,000 of the loss that I'd made for myself just through stupidity and technical problem there. And then now we're up $2,500. So I've made $4,500 today, and it's just not fair to only see 2,500 of it. But and that's with a 46% success rate, by the way. And it's mainly just because of the quick ins and outs that I did. I would rather take a $30 loss than to risk 300 and lose that 300. That's silly. And so I just kept a really tight stop loss and kept gaining profit, 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 profit. And I would wait until like a big stick like this was happening, and I would just jump in. And I'm like, here we go. It's all going that way, or it's all going that way. That's where we're gonna go. That's the way I'm gonna run it. And that's exactly how I recovered $4,500 in one day. I just wish it was on my account, but it will be soon. Wow, I'm just blown away. $2,500 showing. That's not fair. All right, so this is what I'm talking about. Like this really grinds my gears. If you go right here and you look, this is below 20. This is below 20. That's below 20. This is 24. This is 25. So we might go ahead and just try to wing it a little bit out of this strategy once I see a green candle and see some buyers come in. But it should be here any moment unless they're gonna go the other way. Like all right. I see a double bottom of these two sticks, and then it's gonna go. I think. We'll find out in 30 seconds. As long as it doesn't go below this, we're all right. We have 1 minute for news to come out. Let's go and find. I lost the website.
Nothing yet. Nothing yet. There he goes. Here we
Here we go.
I'm going to do this.
Good afternoon. My colleagues and I remain squarely focused on achieving
Good
our
afternoon.
dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains
Okay,
solid.
now we're down below 20 on all
Inflation
of
has
them.
moved much closer to
Except
our
the
2%
RSI.
longer run goal.
Or no, the RSI is good
We're
too.
committed to maintaining
Yes.
our economy's strength by supporting maximum employment and returning inflation to our 2% goal.
We're gonna go ahead and enter,
Order
guys.
And today,
Stop
the
filled.
Federal Open Market
Not
Committee
yet.
decided to take another step in reducing the degree of policy restraint by
Order
lowering our
filled.
policy
There we
interest rate by a quarter percentage point.
I'm
We
going
also
to
decided
do
to continue
this.
to reduce our securities holdings. I'll have
Back
more
up.
to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace.
Mm-hmm.
GDP rose at an annual rate of 2.8% in the third quarter,
Oh,
about the same pace as in the
we're going to
second.
get funded today.
Consumer spending has remained resilient. And
I
investment in
think
equipment
we
and
are.
intangibles
Oh, my
has
God.
strengthened.
See,
In contrast, activity in the housing sector has
are you
remained
looking at Woo?
Overall, improving supply conditions have supported the strong
1700,
performance of the U.S.
1800,
economy over the past
1900. Can I get a 2000?
In our summary of economic
Can I get a
projections,
2000,
committee
baby?
participants
Yes.
generally expect GDP growth
I'll
to
give you
remain
2000.
solid,
Prick.
with a median
Filled.
projection
Yes.
of about 2% over the next year.
Yes, I can. Yes, I can.
Conditions remain solid. Payroll job gains
All
have
right.
slowed from earlier.
Thank you,
in the year,
Jerome Powell.
averaging
Where are you at?
73,000 per month over the past 3 months. The unemployment rate
Oh, wow.
was a year ago, 4.2% in
I'm
November.
funded, baby.
Nominal wage growth has eased over the past year. The jobs to workers gap.
All right,
has
let me
narrowed.
go show it all.
Overall,
Oh, did you?
indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures.
Now, just imagine if I had $1,000 or $100,000, $150,000, $300,000 account.
4.2%
That would have made me like 15, 20 grand right there, and that's how I passed the $300,000 eval too.
Inflation has eased
That was insane. I've still got the freaking proof on that one because I was so proud.
longer run goal.
Oh my God, let me
Estimates
pull it
based
up
on the
because
consumer
I mean
price
it was
index and
ridiculous.
other data indicate
We're
that total
$3,431 to the good,
2.5%
right here.
over the
Boom,
12 months
let's
ending
go.
November.
Commissions and fees
Excluding
was
the cost of food and
$900.
energy categories,
That is
core
insane.
PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys, households, businesses, and forecasters, as
Woo!
well as measures from financial markets. The median
Unbelievable.
projection of the S&P for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls
believe
to our 2% objective.
That I was 2,000 in the hole.
Monetary policy
That is
actions
$6,400.
are
That's
to promote
$6,500 that I
maximum
made
employment
today.
and stable prices for the American people. We see the risks to achieving our
Thank
employment
God.
inflation goals
Thank
as
you,
being
Jesus.
roughly in balance, and we are attentive to the risks on both sides of our mandate.
Oh my God.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter
Oh,
percentage
look at
point
that, look at that,
to
look at
4.25% to 4.5%. We've been moving policy
Wow.
to a more neutral setting in order to maintain the strength of the economy and the labor market, while establishing further progress enabling further progress on inflation. With
What a
today's
slip up.
action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or
Oh
too
my
little
God.
could unduly weaken economic activity and employment.
That was
In
beautiful.
considering
That
the
was a
extent and
once
timing of additional adjustments to the
blue
target
moon
range for the
trade
funds rate, the committee will
to
assess
catch
including
that
the
much
overall
action
outlook and the balance of
out
risks
of those many contracts. Look at
on the
that.
preset course.
Holy
Some
Jesus.
economic
I ran
projections.
2
The
contracts
policy
on that too.
participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario.
I'm not even listening to what dude's saying.
The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it would be appropriate to slow the pace of further adjustments.
Man.
You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track.
Good God,
to continue.
I'm tripping.
I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just the general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5%.
Well, Merry Christmas to me. I get a funded account for Christmas.
From 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place.
And then that cash out for Christmas?
So what's really driving the slower rate cut?
Now, I have to, there's one thing. When you've been funded,
the second half of 2024. So
when you get funded, all right, there's another process that you have to get a cushion in your account, which means you got to make more profit. So this is not over. This is just the start of another restart. I've had like 3 funded accounts, and I'm to the point where I know why I don't have those 3 accounts anymore. I know all of the little technical screw-ups you can have. I've learned so much by actually playing the game, not just reading charts and studying technical analysis for 5 years, but to focus on the actual gameplay itself. You know, I can look at a soccer ball all day long, but am I going to be able to kick it and score a goal? Probably not. So that's the relativity of that. And it's not get-rich-quick scheme. It's not anything instant. You've got to fight for this money in the market. And if you make, $100 a day in your account, and then you kind of grow that into it to $200 a day, you're doing your job, because you are a trader and you are trading for profit. The best way to run this, just for an example, I'm done with the Federal Reserve thing. It's not really much news that we didn't already anticipate. So we would go to MNQ, which is a different product completely than NQ. It has its own price movements. As far as I'm concerned, it's 2 different products. Some companies, your prop firms, you would need to check with them before you have a trade going up on this one and a trade going down on the NQ. But if you were to say, go in with one contract, and I'm going to edit my stop loss to say $5, and we're going to take profit at $7.50. Okay, and we're all below the 20, 29, 12, 15, 29. That's bouncing off of. Okay, so then we will buy here.
Order stop filled.
It's already took the stop out.
Order stop filled.
Oh my God, what is my stop loss? $5. Okay.
Order filled.
Okay. So just to even show,
Target filled.
we won that trade. Um, but that would be a small amount of profit. Like that is literally the smallest profit that you can make is with the MNQ or the MES. Any kind of contract of this type takes a tenth of the risk away, so you're not risking much at all. I risked $5 to make 750, so I just bought lunch. Is what I'm looking at. You know, I mean, kind of. You bought lunch at Wendy's biggie bag. You know, that's about what you got out of that. But just as a reference. So at least we know how to do that now. Um, that's where I was messing up because I would come over here to NQ and run 5 contracts, get funded, and then not be able to make the money that I needed to make in a slower, progressive manner. It was always either I blow my account or, I'm moving my stop loss to where I'm just so proud of my trade that I'm just moving my stop loss way the heck down here where it's not even on the chart. Like you can't even see my stop loss. And that's ridiculous. I mean, why trade like that? And that's why I've lost all 3 accounts because my stop loss was inevitably stupid. Um, and that's a rookie mistake to be so proud of your trade that you can't put a stop loss on it. You've got to use your stop loss, especially when news breaks out like this and you get a big move like this. This right here is what got me funded. That right there alone is $4,500. So that's another $4,500 from here to here, here to here. That's $9,000 that you could have made, but that was me being a high risk with 3 contracts with NQ. Actually, 2 actually. Um, but still, that's very risky. You're gonna blow your account if you do that. Don't take a brand new funded account that you just activated. And you have to pay $100 for activating these things. So don't sit there and activate it and then blow it because that's literally foolish of you. So I'm learning this as a video journal, so to speak, and that's why I'm streaming this content because it's going to be something that I can look back on later in life and be like, yeah, I remember whenever that happened. That was such a good memory, and that was a milestone or whatever. Um, but yeah, I did forget to showcase my $300,000 funding certificate that I got. Um, and this one I'll never forget because it was one day. In one day, I made $22,000 on a trade. And that was a moment when I realized, okay, I know what I'm doing completely. And there was the one trade right there, $12,900, and that was just on the 100,000 account. So I mean, there's profits to be made, and you can get them out of these markets, but you've got to be careful. Um, let's see. Here's the 300,000 funded, 300K Rhythmic account, November 15th, and I've been fighting myself ever since to get back into a funded account, and I finally did it. It took a month and 3 days to do it, but I wasn't really trying to get funded at that point. I made it for 4 days successfully on this account, and then I got stupid. The stop loss is there. It's your friend. Use it. Utilize it. That's my best advice to give you is not always to be sure of your trade so strongly and have such a bias of your own wisdom or even with this method of strategies, that I utilize. I utilize 4 different indicators, um, and not even indicators, but also drawing tools to help me keep me balanced with prior levels of resistance. I don't even have those marked today. I have no prior levels of resistance or support or any of that nature. This is just one blue line. You know, it doesn't take a lot of scattered crap all over your screen to be a trader. And it's actually foolish because then you become cluttered. And when you're cluttered, it doesn't help you at all. It literally messes you up because you're focused on all of these different things all at once, and you can't keep up with all that. You just can't. And who is to say that this indicator, the Bollinger Bands, versus the RSI, if that's all I need? I honestly don't know. Um, Maybe I'll try that on a future account. But I mean, the less that I have on my screen, the better. I like to be able to actually see the candlesticks on every single little tick. That's why I have it zoomed in so good, because every little thing matters to me like that. When it comes to the price movement of this, so like right now, sellers are coming back into control to push this down, and I see that probably sticking like that. But you never know. It could be right back down to here. Uh, this isn't a very strong buyer's candle at all. It shows seller's resistance here. And when when the red candle is bigger than the green one, that definitely tells you that their sellers are in control at this time. And it's also below the 200 EMA red line right here. And that's just a factory default. I don't have any extra settings or anything like that on it. But that 200 EMA tells you that you are in a downtrend. And when you see lower lows and lower highs, that also tells you that you're in a downtrend. And I like running 3 minutes. Um, you can go to 1 minute, but it's like they're fake bottoms. That you've got double bottom right there. I would have went all in for up. But it went down below, you know, and you've got to keep your Fibonacci retracement tool. You've got to keep that updated with these different lower lows. And see, like, here's another double bottom. Is it gonna try to go up, or is it gonna go continue down? We don't know. Um, this would tell you that it's going in a downward direction. I mean, but then again, so does this. So you got a lot to look at. Um, and with ATR helping with your stop loss to tell you exactly where you can put your money at and say this is exactly the risk I want to take. And it just really depends. Like if you're swing trading and just getting that momentum out of one big stick like up here, whenever I was in this trade up here, that's going to be an entry, and then this is going to be your exit. Okay, but in between then, I got out, and I'm like, I'm not greedy, blah blah blah. It did this. It pulled up a green candle, retested, and it came back down. Whenever it finished here, I knew exactly what to do because there's nothing to the left of this that has any support at all for miles. So that told me, bam, let's go ahead and get back in short, and we'll take it down to here, and that's what we did, and pulled out 43.29, and minus the commission and fees, I'm sitting at 34.24. Now that 34.24, you're only required to have 3,000 to pass. Okay, and once you pass, you pay the eval fee. You get your money sent into the company. They fund you an account. So tomorrow morning I'll have a funded account. They usually send you an email at like 6 p.m. Central Standard Time. And then the next day, whenever you go to log on, say if you trade, if I get funded tonight and pay my funding fee, it's like $100 or something of that nature. The eval was 33, so I'm spending $133 to become financially free. if and when I get my payout. Because when I say if and when, there are rules that you have to follow with certain prop firms in order to get your cash out. There's one rule that's really important, and that's the 30% rule. And the 30% rule basically means, say, if you were to say your portfolio, what a word. Um, if your portfolio was to look like, say, this, where you start at 0, and you had a good day, and then you lost a little bit there, okay, and that's cool. And then you had another good day. You're up, say, $300 at this point, okay. Well, we're gonna go down just a little bit. Say you lost $100. Then we go here. Oh, he hit $500 today. Wow, that's big. That's something else. And we'll even put that to the blue line. Okay. And then we go the next day, and we hit another 500. Um, and then we say we lose 500 the next day. Next week after that, we go from here, and we hit like I did today, and made $2,000. Okay. This day right here is going to kill you for trying to get a payout, unless you build your portfolio longer and go all the way out to here, because they want to keep your request in a respectable manner. They have to make sure that you're growing your portfolio correctly, because this is other people's money, and that's not a joke. So when you're trading other people's money, you've got to pretend that this is your kid's college fund, and your mortgage is on the line and everything. Like it literally, it's still your money, because it is. You've already funded yourself. Why go blow it on stupid, to be stupid about it? So always use wisdom with this. But it's very possible to make a good living doing this. If you Google it, it'll tell you that a solid day trader that has a profitable strategy that utilizes their strategy and trades in particular to their strategy only, as it is a winning strategy, they make on average of 96,000 a year on up to 200,000 a year. So that's 6 figures a year to trade. I'm not going to sit here all day and trade. My stream's only going to be an hour, 2 hours long. But literally, I can talk about day trading all day, not all night long. But as far as the actual job itself, the first 30 minutes of the market open, and you could be done for the day. I mean, there are strategies out there. If you want to know more about that, hit me up in the DM. I've got a group that I'm with AZB, and they're phenomenal people. And I can tell you this from experience, they're there to help you completely. They're not there to give you signals. I'm not either. If you do a trade that I do, you're a fool. Because why copy somebody else? I have a whole different portfolio than you. So that's not what we're here to do. I'm not here to say go in at this and get out at this. That's not what we're doing, because I'm gambling something else completely different than you are. You could be gambling the $30 that you spent on the thing, on the evaluation, or I'm gambling with minimum risk now. I'm talking like $5 loss setups. I'm not even joking, because I want my payout and I want to grow correctly. And so running that tight stop loss allows me more trades a day, but I don't need that many trades a day with my strategy. So that's the difference. So if I have to get into a trade 5 times to get the right entry, and I've lost 20 bucks on each one, that's $100 that I've lost in one day. But that fifth time that I bought was the right time, and it goes up $1,000. So there's the key moments of what you can take away from this. But anyway, so keep your stop loss tight, and keep your target profit, take profit, keep that at a respectable level that doesn't allow greed to get in the way, but also doesn't allow fear to take over and say, oh, I'm going to lose my profit before I even get it. Put it at a prior zone that makes sense, and use the fib. That's my wisdom sharing for the day. Guys, I'm out of here. I'm $6,500 up for the day. I'm so done. I'm saving that, and I'm out of here. I'm done. And it is Wednesday, December the 18th. Thank you.